Hello everyone, and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will discuss trading strategies and social media sentiment.
Hello everyone, my name is Radovan Vojtko, I'm CEO and Head of Research at Quantpedia. Today we will discuss the impact of news media and social media on financial markets. It is without a doubt that news and influencers have really big impact on market prices. Let's take an example. I think most of you know the name Jim Cramer, who is running his show Mad Money on CNBC from 2005. He's really known for his predictions, and a lot of his predictions are not true. So he's trying to predict which stocks are a good idea to buy. There is even ETF that has an investment objective to short stocks that are ideas of the Jim Cramer. So you can even short the stocks that the Jim Cramer is trying to sell you in his Mad Money show. We can see that there is profound impact of media personalities on market prices. It can be on the positive or on the negative side. In today's video, we will discuss how to identify those influencers that have some alpha, what is the alpha of social media at all, etc. So the first interesting paper that I would like to show you is the paper written by Mr. Koppel. It was written in 2021, so it's 2 years ago, but still very interesting. What is the idea of the paper is that the researcher tried to distill and identify the new market factor, which he called social media sentiment. Then he tested this social media sentiment factor and compared it to the other well-known factors like size, value, quality, momentum, etc. Here is the result of the performance. Social media factor is called positive minus negative sentiment, P minus N. It is this chart. So as we can see, the social media factor is quite significant. We can even price the stocks by that factor. It has interesting performance and it can be comparable to the performance of the other well-known factors like quality, value, investment, size, etc. That's the first idea. If you are interested, I really recommend you to read the paper, see what is the exact methodology of how the social media sentiment factor is built. But there is also another paper that I would like to recommend. It's called Finfluencers. It's a paper from Swiss Finance Institute research paper series written by a team of the researchers. What is the paper about? The world is full of the influencers in the social media, and the authors try to find out which of those influencers are skilled and which are significantly anti-skilled, so they do not have any skill, and it's significant that they do not have any skill. So I mean, Jim Cramer is an example of that, and which of them are not somehow special. Once we are able to identify these skilled, anti-skilled, or unskilled social media influencers, you are able to copy those traits. So in this case, you can go long the ideas of the skilled of influencers. You can short ideas of the anti-skilled influencers. So those are the influencers that are the most often wrong. And you are trying to not use ideas of the unskilled influencers, because those unskilled influencers, they will just add unnecessary volatility into your portfolio. So here we have the distribution of probability of being skilled, unskilled, or anti-skilled. Once you identify which one are the skilled, which are anti-skilled, you can build the portfolio based on that. The methodology for building the portfolio is not very complicated. I mean, the methodology is described in the paper. You can describe it very quickly. You basically take the ideas of the influencer, you try to check whether their ideas have a significantly positive abnormal return, and in case it's statistically significant return in the past window, you can take that influencer and you can put it into the bracket as a skilled influencer. On the other hand, if you take ideas of the influencer and his ideas have a statistically significant negative alpha, you can place it into the bracket anti-skilled. You do this calculation on a periodic basis, and you still have some persons in the skilled bracket and anti-skilled bracket, and you go long ideas of the people that are skilled, on influencers that are skilled, and you short ideas of the people who are anti-skilled. That's also the idea, how to get some alpha out of the financial influencer advice. Now the question is where we can get those advices. I mean, there are a lot of different platforms. I will not mention them all of them, but there are a lot of the platforms like Twitter or StockTweet on which you can get information about the ideas of those influencers, and you can get also the data and statistics. I hope that you liked current short video. We learned something about financial influencers advices and how to get alpha from that. I hope that you will join me in the next video, and do not forget to subscribe to our channel. It will help us a lot. Thank you very much.
Interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.